Credit cards versus BNPL, Buy Now Pay Later in Australia. There's no doubt the Buy Now Pay Later (BNPL) phenomenon has changed the payments landscape in Australia. Research by Roy Morgan in September 2019 found 1.95 million Aussies had used at least one BNPL service, such as Afterpay, Zip Money or Zip Pay, at the shops or online in the past year. Meanwhile, the use of traditional credit cards declined about 3% during that time. But is there a catch using the Buy Now Pay Later service? And does this payment method fit into your budgeting and financial goals? In this episode, we'll take a look at why millennials are becoming less interested in credit cards, ways to avoid debt traps and strengthen your spending habits, plus one trivia question about the Buy Now Pay Later payment model. Today's trivia question is, which Swedish international company was the latest to enter the Australian BNPL market? Before we get too far, what are Buy Now Pay Later? What is Buy Now Pay Later, BNPL? Just as the name suggests, Buy Now Pay Later services allow users to buy something they want now, to then pay for it later. This is not new, we hear you say. No, it's not. Buy Now Pay Later schemes have been around for some time now. If you've ever seen ads offering 60 months interest-free or buy now and pay nothing for 12 months, that is essentially Buy Now Pay Later. Many younger Aussies are turning to Buy Now Pay Later services. Buy Now Pay Later is extremely popular with the millennial crowd in Australia. Roy Morgan research from late 2019 found just under 2 million Australians used a BNPL scheme in the year to September 2019, with more than half of these users aged under 35. The total number of BNPL users in Australia is likely to be over 2 million now, following a surge in sign-ups over the Black Friday and Cyber Monday sales periods. In contrast, credit card use has fallen, with recent Reserve Bank data finding the number of active credit card accounts fell by 8% over the year to December 2019. Australians between the ages of 14 to 34 account for 55.9% of Buy Now Pay Later users, with those in the 25 to 34 range making up 33.5%. For context, people in these age groups only make up 18% of Australia's population. BNPL loans usually have caps on late fees and can be repaid over 16 days to 2 years, depending on the consumer's preferences, making it an attractive budgeting tool. BNPL services don't come without risks. BNPL platforms are far from perfect. An Australian Securities and Investments Commission (ASIC) review into them in 2018 found the majority of BNPL users admitted to spending more than they otherwise would, while 1 in 6 users said they had experienced at least one negative impact as a result of using BNPL services, such as delaying bill payments, overdrawn, borrowing money, getting loans or getting cash advances on their credit cards to pay off their BNPL debt. But on the other hand, Afterpay's financial report showed 93% of transactions incurred no late fees, and even if they did, the late fees charged by BNPL platforms can pale in comparison to the potential interest charges on credit cards or personal loans. Plus, the BNPL options available in Australia don't charge annual fees, which many credit cards and loans do. In an increasingly debt-averse society, platforms such as these aren't as bad as you might have heard they are, as long as they're used responsibly. Just like a credit card, BNPL isn't buy now, pay never. You still have to repay everything you buy on time. It can simply offer a more structured and technology-focused approach to repayments, which is something that massively appeals to younger consumers. Some Aussies fall into credit card knowledge gaps. 1 in 5 young Aussies are in the dark about the interest rate on their credit card, despite many using it as the primary or even sole method of making purchases. Research commissioned by Credit Union (CUA), which polled around 2,000 Australians, found that 51% nominate a low interest rate as an important consideration when choosing a card provider. Yet 20% or 1 in 5 are unsure what their current interest rate actually is, the study found. That was despite 92% of people polled admitting that they had made purchases on a credit card over the holiday season, with close to 1 in 3, 29%, stating that they pay for everything using credit cards. If you don't understand the features of your credit card and how much interest you're paying, you can end up feeling financially stressed or be at risk of falling into debt traps. According to the survey, the most important features of a credit card nominated by consumers are a low or no annual fee, a low interest rate, reward points, and the number of interest-free days. If you're unsure which BNPL service is the best, make sure you hit that subscribe button and stay tuned for our future episode covering that topic in detail. 5 ways you can avoid debt traps and strengthen your spending habits. 1. Check the interest rates and miscellaneous fees. One good way to avoid debt traps while using any BNPL service is to always check the interest rates and other sundry charges. Also, consider that if you miss your payments, you would pay late fees to the operator. It's also the same for credit cards. Ensure you determine the interest rate before obtaining one. 2. Compare credit cards before committing. To get the most of your spending experience, compare credit card features like interest rates, annual fees, reward programs, and comparison rates. Your findings will help you to make a wise spending decision. 3. Capitalize on bonuses, rewards, and complimentary extras. Another way to avoid debt traps and strengthen your spending habits is to capitalize on bonuses, rewards, and complimentary extras. Australian banks offer credit card points each time you use your card for payment. Save these points to get rewards such as flight upgrades, international economy flights, business domestic flights, and much more. 4. Track your spending and pay your bills. Tracking your spending on a regular basis can give you an accurate picture of where your money's going and where you'd like it to go instead. Start grouping your expenses. Some credit cards automatically tag your purchases in categories like department stores or automotive. You could find that your morning Starbucks run is costing you a lot, or maybe you'll realize you're paying for recurring subscription services that you could do without. Your spending will consist of both fixed expenses and variable expenses. Fixed expenses are less likely to change from month to month. They include mortgage or rent, utilities, insurance, and debt payments. You'll have more room to adjust variable expenses like food, clothing, and travel. 5. Get a copy of your credit report. There are a few rock-solid pieces of financial advice everyone should strive to follow. Save money for an emergency fund. Pay down your debt. Don't spend more than you can afford. But there's another bit of financial wisdom that many experts tout. Keep your credit scores as high as possible. Credit scores are an important part of your financial health. You want good credit scores because they can unlock many savings and benefits, including access to loans and credit cards with the most favorable terms. You can get your report from Equifax, Check Your Credit, Illion, and Experian. So, back to today's trivia question. Which Swedish international company was the latest to enter the Australian BNPL market? The latest BNPL company to launch in Australia is Klarna. Klarna's platform allows customers to enjoy a suite of payment options, including the ability to pay off the purchase in full in 30 days with no fees. That's it for this episode. Please give us your feedback in the comment section below. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck, and see you in the next episode.